Hello to everybody, dear subscribers. FutureTrend channel is glad to welcome all of our readers. Today is 21st of December 2018. Excuse me, today is 24th of December. It's our mistake. Let's correct it. So, what we'd like to say in the framework of today's analysis. First of all, the United States dollar is under pressure. And that's not because only of the Federal Open Market Committee last decision to raise its benchmark interest rate, but to weaken its further pace of tightening for the 2019. Of course, there is some fundamental background of doing so, and we see that the United States dollar losing its upside momentum because of falling yields of United States government papers. At the moment, United States 10-year Treasury notes trading at the yield of 2.81%, and that's around 6-7 month lows. Don't forget that even a couple of weeks ago, couple even of days ago, we were trading above the threshold of 3% in this type of government papers. So not only this moment is driving the United States dollar at the moment, there is another example, an example of risk aversion arising, risk aversion spreading across financial markets, especially in the equity markets, and as a result, the United States dollar is under pressure, especially against so-called safe haven currencies. Among them is Japanese yen and Swiss franc. Let's see, by the way, the dollar yen, which is during yesterday's trading session, plunged below its moving average 200 daily line located at 110.90. Today is a really very important day. We are in the rebound mood at the moment. Dollar yen is trading at 111.44. We suggest that any kind of rebound closer to the resistance barrier 112.20 should give you an opportunity to short this type of currency. Anyway, on the result of this week, if we really close below the level of 110.90, moving average 200 daily line, it will be a really very good indicator to sell dollar yen further during next week. As regarding some other currencies, also dollar Swiss yesterday broke below its moving average 200 daily line. Here the daily line is intersected at 0.9865. Now we are trading above that level, but anyway, dollar Swiss is under pressure. In case of breaking and closing below the aforementioned level, next level to watch will be 2018 uptrend line located at 96.90. That's why, by the way, in the type of currencies, excuse me, today is 21st December. Regarding the situation with dollar Swiss. Dollar Swiss, as you could see, we still target at the level of 0.97. The level of 0.97 where lies aforementioned uptrend line. As regarding euro dollar, also here some interesting news. Let's see. We during yesterday's session, twicely tried to test and break the level of 114.85, where lies so-called downtrend line of 2018 that was drawn from the highs of the middle of April, when the United States dollar started its wave of strength during 2018, and now we still expect that sooner or later the level of 114.85, 115 will be broken, and in case of real closing above that level on the weekly basis, in that case we could see much higher levels, as we suggest from technical point of view, but also from fundamental point of view, because now, despite of the weakness of economic indicator in the Eurozone, there is a big plus for the euro dollar right now, and that's improvement in the negotiation process between Italian government and European Union Commission regarding overshooting of Italian budget. So from that point of view, probably euro-dollar has an opportunity to expand its current strength further to the upside in case of breaking above 115. As regarding some other pairs, we should understand that risk aversion sentiment does not bode well for the commodity block of currencies, and that's why for example, Aussie dollar and Kiwi dollar, as well as Canadian and Russian ruble, because of falling energy prices, these types of currencies are at the moment under heavy selling pressure. Let's see, for example, the chart of the Aussie dollar. Here we are really very close to retest the lows of this year, located at 0.7020. In case of breaking below psychological important barrier of 0.70, probably it will be a really very good signal to further short the Kiwi dollar. The same applies, by the way, for the New Zealand dollar. Here, of course, situation is not so dramatically negative, but dollar Canada is a good example that despite of the current sluggishness of the United States dollar, despite of the really strong economic numbers coming from Canada, falling energy prices plays a major role for the dollar Canada, which is in clear uptrend at the moment. Today, by the way, is the day of publication of important Canadian economic numbers in the form of retail sales report and gross domestic product. So keep in touch with such kind of indicators. But don't dramatize it, and don't expect that much stronger reading of these indicators will give you opportunity to really turn around the price of dollar Canada. Now, at the moment, any kind of downtick in the price of dollar Canada should give you an opportunity to enter a new long, especially closer to the so-called uptrend line, current uptrend line located at 32.70. Thank you. We wish you a pleasant day ahead. Take care. Have a nice weekend, and bye bye. For now, it was your Future Trend channel with you.